Hi everyone, welcome back to InvestED. Here in Canada we have what's called the Bank of Canada, and that is our central bank. Canada is not unique. Most countries around the world have a central bank. In the US they have what's called the Federal Reserve. In England, for instance, they have the Bank of England, and so on and so forth. And the role of the central bank is not like a traditional bank like RBC. It doesn't hold your money for you. The Bank of Canada really has two main jobs. One, keep inflation under control, and two, when inflation's okay, support the economy. Now, what is inflation anyways? Inflation is when everything you want to buy becomes more expensive. It's the reason your grandparents could go to the movies for a nickel and it costs you $30 today. Now, inflation, a moderate amount, is a sign of a healthy, growing economy. 2% is generally accepted as that healthy amount, but sometimes inflation just gets out of whack. And there are many reasons for this. It's something we can cover in a future video, but to simplify, inflation typically runs out of control when either the supply of stuff is disrupted, or B, demand for stuff grows too strong. And that's the technical terms. You either get what's called cost push inflation or demand pull inflation. And when inflation is more than 2%, it's problematic. Your wealth is, the stuff you want to buy is getting too expensive and the quality of your wealth is being depleted. When this happens, the central bank springs to action. They'll use the tools available to them. Often they'll increase or decrease the supply of money in circulation. They'll raise or lower interest rates. And ultimately, they'll change incentives for spending versus saving, and try and bring prices from accelerating problematically. Now, once inflation is under control, central bank moves to priority number 2, which is the economy. And that's where, as we're recording this in September 2025, that's where we appear to be in Canada. Inflation appears to be near its 2% target, so the Bank of Canada is focused on supporting consumers and businesses. For instance, the Bank of Canada, they're meeting this week, and the expectation is that they're going to cut interest rates, and that should make it a little bit easier for businesses to borrow and reduce the burden of public debt in Canada. Now, every time a central bank meets and has to make a decision on whether to raise or lower interest rates, they'll debate, what's more problematic, the current state of inflation or the current state of the economy. And that's why the central bank has a very important job, to say the least.